Moving on, let's shift focus to Europe. Now, Iran conflict is rapidly emerging as a major economic threat for the United Kingdom. Economists now warn that the war could cost the British economy nearly £32 billion by 2030, with the annual hit to public finances estimated at around £8 billion. The biggest concern remains the disruption to global energy supplies. Rising oil and gas prices, they are already pushing inflation higher and increasing pressure on households, businesses as well as the government. Analysts say UK inflation could surge to as high as 6% if the conflict intensifies further, creating a fresh cost of living challenge for the British economy. The economic shock is also hitting Britain's public finances and broad markets. Around a quarter of UK government's £3 trillion debt pile is linked to inflation, meaning higher prices automatically raise debt interest payments. At the same time, slower economic growth is expected to reduce tax revenues, and that's adding further strain on the Treasury. Britain's borrowing costs have now climbed to their highest level since 1998, with a 30-year gilt yields rising close to 5.8%. Economists estimate Chancellor Rachel Reeves may already have lost nearly £10 billion of fiscal headroom because of the rising market rates. The crisis is now intersecting with growing political uncertainty in Britain. Financial markets are increasingly nervous over speculation surrounding Prime Minister Starmer's leadership after Labour's expected losses in local elections. Economists and investors warn that a prolonged period of political instability, combined with the inflation shock from the Iran conflict, could further unsettle UK markets and weaken investor confidence.